As a trader, we all look for tight or low spreads, which helps us to get in and out of the market. Using the right broker can help us try different strategies. With multiple options of brokers on the web, here at Stock Sniper Trading, we have a recommended broker, that is, Trade. With spreads as low as 0 pips and leverage up to 500x, Trade is just one click away. With multiple account types to choose from, you also have a minimum deposit of $10. Using Trade's affiliate program, refer a friend and earn up to a 40% commission on trading volume. Built by traders, for traders. Trade.
Welcome to Stock Sniper Trading. In today's tutorial, we will be going over the bearish flag pattern, which is another continuation pattern. A bearish flag pattern can be identified often on charts that occur in a strong downtrend. They are called flag patterns because they resemble a flag on a pole seen on charts, and can be called bearish flags depending on the downtrend. The typical features of a bearish flag pattern has a bearish pole, which is formed by a strong downward movement on relative high volume. After, the stock consolidates near the bottom of the pole on lighter volume, forming the bearish flag. And after some consolidation, the price breaks out on relative higher volume to continue the downtrend. Flag patterns can be used in momentum trading and can be used on any candlestick time frame, especially the 5 and 15-minute time frames to scalp short-term price movements. In this particular example, we can see price action on the left coming down, creating the bearish pole, and as price consolidates, where we form the bearish flag with a support and resistance, and price action is just trading within the consolidation area, we can see that the volume is getting lighter. As the selling volume picks up, we can see it break below the bearish flag and continue its bearish momentum. The bearish flag pattern is a continuation pattern. The bearish flag, it is a continuation pattern. It has parallel trend lines. It is a preceding downtrend creates the flag pole. The area of consolidation creates the flag. As selling volume increases, the downtrend will continue. And this is where we can use our Stock Sniper trap and gap strategy. On the left, we can see that we have an existing downtrend from a higher time frame where we have bearish momentum coming down. Eventually, it will reach a level of support and creating the bear flag, where price action is trapped in between the support and resistance, and we consolidate there as the volume decreases. As selling volume increases, then we break out of the support. We will continue to the downside and continue this bearish momentum. This is an example of a bearish flag breakdown, which is a continuation pattern from our trading view charts. In this particular example, we are looking at the USD CAD, the American Canadian dollar, and we are on the 5-minute time frame. We can see that we have a downtrend on the 5 minutes as price action is coming down, and we create the bearish flag pole. The big bearish engulfing candlestick is the pole. B, we create the bearish flag consolidation. As price action consolidates here, as the selling volume decreases, we have a price action trading sideways. Now we are looking for C, our bearish breakdown, which continues our downward momentum. As selling pressure increases when we break through the bearish flag, We get D, bearish continuation, and price action continues to make lower lows and lower highs and continuing the downward bearish momentum. This example is the flag is a horizontal or rectangle box, and we can also get sloping flags. Let's take a look at that example. This is another bearish flag breakdown. This is a continuation pattern, but now we have parallel trend lines that are sloping down, continuing the bearish movement. So A, we have our bearish flagpole. This is our bear rally or selling momentum. And we reach a level of support where we do get some buying momentum. However, we get B, the bearish consolidation, where we're making lower highs. As sellers enter the market and continue pushing the price down, we eventually make lower lows, and as selling volume increases, we will continue to go bearish. C, we have the bearish breakdown where we break through some previous support levels and we continue to the downside. D, we get our bearish continuation and price action continues to the downside as bearish momentum continues the original bearish trend. This is the bearish flag breakdown. Let's take a look here how it happens live. So we have some consolidation at the top and we have now the bearish momentum coming down. Now we form the bearish pole, and the pole, after we create the pole, we should see some type of consolidation where the selling momentum starts to decrease. That candle broke through. However, we have to remain patient and wait for the candle to close. As that candle broke through the support, the candle closed within the flag again. So you can take an impulse sell there. However, the price action would come back. So it is better practice to be disciplined and patient and wait for the breakdown with the body to close below the bearish flag. As price action consolidates in the bearish flag, we're waiting for momentum to increase and selling volume to come into the market. Here we get our first bearish candle break through our bearish flag and close below it. This is an indication now that sellers have gained momentum and we should see further downside. We can see now the continuation to the downside. As price action came down, creating the pole, we consolidated in the bearish flag, and finally when we broke out of it, we had our first bearish candle, the body close below the flag, and we continued to the downside, creating new lower lows and lower highs as the price action continues to decrease and sellers are in control. Quick recap. The bearish flag pattern is a continuation pattern. It has parallel trend lines. Preceding downtrend creates the flag pole. The area of consolidation creates the bearish flag. As selling volume increases, the downtrend will continue. And this is where we use the stock sniper trap and gap strategy. This strategy requires patience and discipline and waiting for candlesticks to close the bodies. We hope you enjoyed this tutorial on the bearish flag continuation pattern. On our next tutorial, we will introduce the ascending triangle continuation pattern.